All right, guys, let's talk about another strategy. I'm giving you the double whammy today. So the next strategy I want to talk about is the story strategy, catalyst strategy, whatever you want to call it. So AITX, AI stock, and it's unveiling a humanoid robot in April. So now we have a date, April. So that's still 2 months off. It's sitting at the bottom down here at 0028. I'm going to look to accumulate 50K again. I did that once already. I'm going to do it again. I have to accumulate it slowly because you can't, good luck getting filled. It's going to take time. Thankfully, we have 2 months, but I'm going to try and accumulate as much as possible. And then in April, we should get a pump. And it's done so over and over and over again. There's this WMA, ignore it. It doesn't mean anything. You wouldn't want to use that. The mean reversion strategy, this is not what this is about. This is about buying the bottom, which is at 0028, 0026, around that area. And so not only is it a bottom play, but it's also a catalyst play, hype play, whatever you want to call it. Because we know a date, April. What's being unveiled? Humanoid robots. So we're getting in now. And then when it's actually unveiled to the public, we're going to make hand over fist money. Last April, as you can see very clearly, what happened? They unveiled some new stuff, and it exploded to 500%. 500% is what exploded. That's from 002 to 1 penny. I believe that can happen again, because they're just getting better and better. Like, this is the kind of stuff that gets people excited. That's the most important thing. So it's a bottom play, but also a catalyst play. And we're getting in early. Which is why I'm like quadrupling down. I have a rule no more than 10K on a penny stock. Which is why I never added more than 10K on Sybil. And I'm still going to hold that. Because Sybil, same thing as AITX. Sybil, unfortunately, Sybil was also a bottom play, but also a catalyst play, right? Because we know they have, 7 significant contracts under negotiation. So the bottom was there. Unfortunately, that didn't hold, but that does not change. That does not change. Like, okay, I get it. The share price dropped, but the share price dropped. I shouldn't be eating pizza while I'm making these videos. The share price dropped. I get it, but nothing fundamentally has changed about the company. We would still assume, based on what we know, that they still have 7 significant contracts under negotiation. And I've already shown you multiple times they got contract awards from the government. Multiple times now. One big contract award is all it's going to take for this to skyrocket. Back to a penny and beyond. It's done it already in the past. It can move, not even without a catalyst. It can just move on its own 005s. So this drop doesn't mean anything to me. It was a bottom play plus catalyst play. Okay, the bottom broke. Let it come down to wherever the next bottom's going to be. And guess what? Again, the catalyst is still there. It's not like the catalyst disappeared. Until we get new information, we still assume that nothing has changed about the company and everything that's going on with it. So Sybil, despite the bottom breaking, it's still a catalyst play. So it would be stupid to sell. Now, if Sybil comes out with news saying, oh yeah, by the way, those 7 contracts not happening, then I'm going to take the huge loss, because a bigger loss, because it's probably going to drop to 002s and fast. Because that's a big deal. That's a big deal. The reason it's even holding here is because there's a lot of people who think like me who go, well, okay, the share price is dropping, that's fine, but as far as we know, there's still 7 contracts underway. So why would I sell? Does that make sense? Okay, the bottom didn't hold, but the catalyst is still in play. So I'm just showing you Sybil as an example. Like, sometimes a stock can be both two plays at once. The bottom play and also a catalyst play. If it doesn't work out that the bottom doesn't hold, that's cool. We still have the catalyst that's still in play. And we just got to wait. That's all there is to it. But people don't think this way, or they just don't have the experience to know how the OTC trades. So it's same exact thing, right? It pumps and then it comes down and no one wants it down here. That's when we start accumulating it. And then in April when it pumps again, or maybe it gets another pump soon, whatever, we take our 50 to 100%, or maybe it goes 500% again, like it has happened, and it happened around April. It's almost like it's a pattern. Well, yeah, I'm like quadrupling down. And this bottom has held since 2023. So you got too much lining up for this one. Now, let's say the bottom breaks for some reason. Well, that does not change that they're unveiling a humanoid robot in April. The catalyst is still in play. So there you go. That's like, I don't know if any of that made sense. But the point is, the best kind of plays are stocks that have a catalyst and that hold a bottom. Like, you know the date, so you buy in at the bottom. The date comes around, it explodes, you make your money. Now, if the bottom breaks down and there's no bad news, it's just the share price decided to go, lower because people were impatient, didn't want to hold, or whatever the case may be. If it just drops on its own because too many people are just selling and chasing something else, or whatever the case may be, if it's not dropping because of a bad PR, then at that point, you got to have the conviction and still believe like that they're going to follow through, that the CEO, the company is going to follow through on that catalyst, on that date. And so when that catalyst drops, even though you're in the red, when it does pump, you're going to be in the green again, and you're going to make your money. But it takes, again, experience and conviction. And no stop loss, of course. Like, you got to average down. Or you don't average down and you just actually just believe that you are correct and that the company is going to follow through. If the company doesn't follow through, you'll know because you're going to have to take the loss. A BHAT, perfect example, right? A penny stock, 5 cents. It kept dropping here, kept dropping, but there were a lot of people who had conviction. They actually added more as it went lower because they have experience, they know how to play the game. And then it got that huge pump back to 14 cents. And I alerted it here at around 9 cents. It pumped here. I think, who was it? Was it Jay? I think JA made money on this pump here. And then he bought back in and just kept going lower. If he had conviction and he knew how to play the game, he didn't care. He just kept adding. And then he made his money back and then some. In fact, he didn't lose. What am I saying? So, it's that comes down to experience and believing that the CEO and company aren't trash enough to screw you over and they're actually going to follow through on those dates, those catalysts. So that's why it's important to note when you're looking at a stock, like, is it a catalyst play, bottom play, pure bottom play plus catalyst? From now on, moving forward, I'm going to label, every time I buy, I'm going to label exactly what kind of play it is. So it's either going to be a pure bottom play. A pure bottom play means it's at the bottom, you buy the bottom, and you take profit when it goes up. It doesn't have a catalyst. It's just, you're just playing literally the technicals. If I say it's a pure bottom, that's what that means. If I say it's a bottom plus catalyst, then you know it means, hey, this has a catalyst coming. It's at the bottom. Load up. If the bottom doesn't hold, it's up to you if you want to take the loss, or you can have the conviction, believe that the catalyst is going to come and that they're going to follow through. And when it does, despite it going lower, it's going to pump huge and you still make your money. If anything, you double down as it goes lower. You're like, hell yeah. But it takes a different kind of mentality. Also, I think a lot of you go in with too much money. Like, a lot of you have told me, like, I go in all in every time, and I'm like, well, that's just silly. That's just stupid. That's just absolute silliness. That's a great way to lose money, because the one time you're wrong, you're going to get destroyed. Like, if you bought all in here, well, you were lucky that it came back up for you and then some on top of that. Like, you could have, even though you bought it 10 cents, let's say you bought it 10 cents and it came down as low as 3 cents and you just held a big bag because you don't want to take it the loss. Well, guess what? It came back for you. It came back up to 14 cents. You actually could have sold it for a 40%er. But that doesn't mean anything, because guess what? The next time you go all in and this decides to never recover, you just lost it all. So you can win like 20 times in a row. The one time you're just going to blow up. That's why you shouldn't be going all in. But unfortunately, people are very dumb, I've noticed. They don't listen, so whatever. They'll learn and they'll wash, or they'll wash out of the Discord. Because people are idiots. They just are. Like, I wish I could hold back and say, no, people aren't idiots. No, people are idiots. Like, even the artist that I'm paying right now for, she's not an idiot, or he. The artist that I'm paying right now for some artwork, Let me see if I can pull it up. Can you guys see it? Oh yeah. Let me see. Where was it? Is it this one or is it this one? Okay, so I got some artwork done. You know that guy, this guy, the Yu-Gi-Oh copycat or whatever you want to call it. So he or she does some great work. Like this, I could never draw like this. I've been teaching myself how to draw. I think I'm just gonna pay people at this point. But yeah, so his or her response, her review. She left me or he left me a 5-star review. Very responsive and nice person. This is sad that this is like the comment here. This kind of triggered me here because that's sad. Because I know I've read on Reddit that a lot of people treat Fiverr artists like garbage. Like they just treat him like trash and have too high expectations. And the fact that he or she left this comment saying, hey, this is a very nice person, because other sellers are going to be able to see that review on me when I buy. As a buyer, they're going to see that and be like, oh, this is a good person to work with. They know they don't have to deal with, someone that's trash, that's going to treat them like garbage. And obviously they put up with it because money, right? They're trying to make money off that Fiverr stuff. People are idiots, though, is the point. People are dumb. People are idiots, and it doesn't matter if I give you the keys to victory. If you're not going to listen, you're just going to blow up. That's all there is to it. That's all there is to it. That I can't really do anything. You got to help yourself first. Please stop buying at the worst time possible. Especially Peter. If you're watching this, Peter, I'm not upset, but come on, man. He bought Adler stock at 102, and I'm like, bro, it's a bottom play, pure bottom play. I don't know if there's a catalyst for this. It's a pure bottom play. You want to buy as close to like 90 to 95 as possible. Why would you do this? You're hurting yourself by buying at 102 or 105. That's just silliness. That's just stupid. Like, sir, the bottom is very obvious down here. Why would you buy at 102? The only thing I can imagine is you're scared that you're going to miss out, I guess. I don't know. That doesn't make sense to me. Even the rectangle that I drew here is between 90 and $1. So you shouldn't even be at least buy at $1, right? But even then, for the best risk to reward ratio, you want to buy as close to the bottom as possible. You could have literally set a limit order and bought it at 91 to 92. You could have bought maybe, a fourth of your position at $1, another fourth at 95, and then, here another 1/4 at 93. Or the full position at 93 at that point. Like, I think you need to split up your buys or something. Like, some of you are just buying it like it's like you're afraid that you're gonna miss out, so you lump sum at like the worst time possible. And I'm just sitting here like, why would you do that? Like, I usually add scale in. Like, I'm doing that with AITX. I'm scaling in. I'm not just gonna lump sum, and I can't lump sum anyways if I wanted to. But either way, I would scale in, because in case it does drop to 002, and then I'll add more. And like I said, I can go on and on. But I've noticed a lot of mistakes, and I don't know if it's just me who's crazy, or I just see things differently, or I don't understand. Like, I just don't understand. So when I say pure bottom play, literally like set a buy limit order and try to scoop shares down here as much as possible. Because you're doing yourself a disservice by buying at 102. Because the people that buy at like 90 cents, they're just going to, it's going to go up to 110 or $1, and they're going to be up quite a bit actually, because it's literally around $1. Whereas you're buying at 102, you have to hope that it goes to like 120 or to even make any significant amount. So you're actually hurting your risk to reward. That's it. I'm done there. So this was for Peter. That last part was for Peter, because he keeps buying like at the worst time possible. I'm like, and Sebluke, stop buying at the worst time possible. Scale in. Stop lump summing. The reason you scale in is because if you buy a fourth of your position and it doesn't work out, you lose a lot less. So instead of losing 50, you lose 12.5. But if the trade works in your favor, you add more. You scale up. But that I wouldn't recommend doing that if you're not experienced. Those of you who were around when I day traded Rigetti, do you remember that? And some of you were like, "Wow, why are you?" I've never seen someone average up. And I was like, "Yeah, this is pretty dangerous, but technically I should be averaging up according to my day trading strategy, which I have not revealed because it's and I don't really care to day trade. Let's be frank. It's better to just sit on the bottom. It pops 30 to 50%. You've seen that with Trug. You've seen that with a bunch of stocks that I've talked about. You just sit on them and it pops 30 to 50%. That's so much easier, and you don't have to sit there watching the markets, which is another thing I want to talk about. Too many of you are watching the markets like constantly. And I'm just like, man, do you guys got nothing to do? Like, why are you watching the markets constantly? I guess if you're day trading, sure, but outside of that, you should just be positioning yourself at a bottom, and then at the end of the day, check on it, and if it's still holding up, then you're good. That's literally all you should be doing. What do you think I do? You think I'm like watching the whole? Hell no. Hell no. Hell no. Like Nvidia here, it looks like it's forming a bull flag, and if it does, I think honestly, the way this is going sideways, I believe we're just waiting for Wednesday to get direction in the market. That's what it feels like. I'll stop there. But like a lot of you are making a lot of mistakes that are just they look like they're not a big deal, but they're a big deal, man. Gotta stop going in all in every time. Scale in 1/4 at a time or whatever. Like stop buying at the worst time possible. Buy at when I say it's a pure bottom play, buy as close, like have a limit, buy it as close to the bottom as possible. And you tell the stock market, fuck you. You tell it that. You look at the stock market. You do not let the stock market dictate when you buy. You dictate when you buy. I want you to remember what I just said. Because I want to buy GameStop, but I want it at 18 to 21. Every time it pumps huge, comes back to 18 to 21. Pumps huge again, back to 18 to 21. Here it just pumped a little bit to 25 for a nice, 25%, even have it written down there. And it bounced off of it, just traded within the range here before going to 35. And I know some people who made 100% because they bought it at like 18 to 20. And it went to, 35. So some people bought lower, I believe. But yeah, some people bought here and just kept holding. But either way, the point is, you dictate when you buy. Do not let the market dictate when you buy. I want to buy it, but I want it 18 to 21. If you're not going to give it to me 18 to 21, fuck you, stock market. Fuck you. You listen to me, stock market, not the other way around. Because some of you have been asking about GME, and I'm like, I'm not going to alert that. That's stupid. That's absolute silliness. You're letting the market dictate when you buy. No, you set your limit buy order down here, and you sit on it, and you go fill me up or get the out of here. Like, get the fuck out of here. Like, that's how you have to think. That's literally what goes through my head. You don't think I think that? I do. I'm like, either give it to me where at the price I want it or fuck you. Like, that's what I tell the stock market. Like, because the stock market don't care about you, and you should not care about it, and you should, sure as hell, should not let it dictate what price you buy at. You dictate where you buy it. And this is going on Patreon, so I can swear. Like, all right, guys, I think that's it.